Upasana, thank you so much for speaking to us. Now, we're just unpacking the eco survey. My first question to you as well is regarding the growth forecast that's been put out in the eco survey, 6.3 to 6.8. Do you find that broadly reasonable? And also to add to that, how much of a cause of concern do you find that figure to be? Because, while we are in the middle of a slowdown currently, the expectation was that next year might be better, but it does not look like it's going to be exponentially better. Any thoughts?
Hi, Pallavi. So I think on the growth side, see, our number for fiscal 26 is at 6.5%. So pretty much in between or in the range of what the eco survey is suggesting at 6.3 to 6.8%. I think it's a realistic range that the government has gone ahead with. We should, I think, remember that external factors and external developments are not probably going to be very supportive of growth. And the growth alpha is likely to come only from domestic demand. So in that context, I think starting with a range which is in this sort of mid six levels as a target for fiscal 25 is probably more realistic. And that bodes well from a fiscal math perspective as well. That is, you're probably going to get numbers which are going to be more realistic from the union budget that is likely to be the numbers that are like that we will likely see tomorrow for fiscal 26 as well.
Yeah, so I wanted to ask one question that, post-pandemic, if you see the growth range like GDP numbers, for 3 consecutive years, we have seen growth reaching, above 7%. It touches on above 8% also. Even the last fiscal FY24, we have seen the growth is, slightly over 8%. So I wanted to ask, since second quarter seen 5.4% growth, RBI also slashed that. Do you think that government should now, change the strategy and the whole economic policy, at this point of time?
So I think, see, for growth to improve, there were transient factors that played their part in the number that we saw in September quarter, and there was also the role from sort of unintended but quite a bit of fiscal consolidation that happened in this fiscal 25 because government spending targets have been tracking weaker than what they've budgeted. And that I think has been a key reason. Alongside, we've also seen some amount of monetary tightening, which has its own role to play in the cyclical slowdown. But as we speak now, and as you see for the outlook, monetary policy is likely pivoting. We are seeing more aggressive measures from the RBI to address the liquidity deficit. We probably look likely to see a rate cut in the next policy. That's what our view is. And from the fiscal policy side as well, yes, the fiscal deficit is consolidating still, but probably we're going to get the slowest pace of fiscal consolidation in fiscal 26. Our estimate is that about, say, 30 basis points to 4.5% in fiscal 26. And incrementally, if you were to see, government capex spending should likely be picking up from here, just because April to November the trends have been so weak. So there is a need to catch up, at least to meet, and it's very unlikely that they meet the budgeted numbers for fiscal 25, but nevertheless to catch up and to cover some ground. And in going into fiscal 26, we expect that at least in fiscal 26 they will meet the targets that they set. So I think the fiscal drag that we saw, which was meaningfully higher in fiscal 25, is going to be behind us, and that will by itself be supportive of growth. So we don't think that there is a need for the government to sort of give away on the fiscal consolidation roadmap, but I think it's more about actually execution and implementation and keeping the focus on, especially on meeting with the capex numbers.
All right, coming to you, Dheeraj, I do want to ask you, the eco survey, whatever we've been able to glean from it so far, any indications in terms of budget expectations for tomorrow, given maybe, for instance, the growth range, for instance, is that reason enough to expect some kind of a stimulus coming in tomorrow?
Look, like I said, the imperative to consolidate the fiscal deficit is very much there. So if you go along with fiscal prudence and fiscal credibility, which has probably been the hallmark of the current government for several years, I think a GDP growth rate, nominal GDP growth rate, anywhere between 10 to 10.5% will be a very credible number. Now, with that kind of GDP growth underlying your fiscal projections, and if you still remain conservative on revenues, for example, your tax buoyancies, etc., I think the government will still have to cut back their spending by about 30 to 40 basis points as a share of GDP. And that by itself tells you that you probably do not want to expect a big stimulus coming out of the budget for the aggregate economy. But I do want to highlight that, the budget can also work with non-fiscal measures, such as about regulation and, ease of doing business, etc., with which it can create a higher medium-term potential growth. And I think this is the perfect opportunity for that when your own growth has slowed.
Right, all right. Thank you so much, Upasna and Dheeraj, for taking time out to speak to us.